What is up, guys? It's your boy T Shroom here, in for the Investing Bros. We're going to have a little fun today. We're going to go a little bit off-road. We're going to look at some charts. We're going to take a look at this golden cross that everybody is freaking out about. I'm going to give you a little bit of my take on it, and we're going to get into some really interesting stories here on October 30th. It is Monday. Hopefully you had a good weekend. I had a great weekend. Very inspiring. Got to spend some time with family, and we are doing it, baby. We are doing it. Let's go ahead and jump on in here to the charts and take a look at everything that you want to see, which seems to be today that golden cross. Let's take a look at it here. On the red, I've got the 200, and on the green, I've got the 50. As you can see, the 50 is crossing back up, and that is a very bullish indicator. So I've been told. So I've been told by the market. No, it is. And it, let's see, the last time that this happened, you can see right back here, it did mark the move, the beginnings of a very bullish move. Since then, we've had that actually cross back down with a death cross back here on September 14th, right? And now we're getting kind of the resumption of the this bull run here with the golden cross. So that's really good to see. It's positive. There's nothing, just generally there's nothing bearish to say about this. But if you take a look just at the rest of the chart here, then you go down to the 4 hour for Bitcoin, you can kind of see that this is something that Tim has been talking about quite a bit, which is the Bart-Simpson pattern that has been playing out here. Basically what this means is this could be kind of bearish, right? Yes, the more that you tap a level of resistance, the greater the chance is that you'll break through it. So that would be the bullish case for this Bart-Simpson pattern. But there's also, the chance that, there's some reason why, there's no buyers above this line, right? And if you go up to the wicks, there's no buyers above 35.2, let's call it, right? So you have to kind of figure out for yourself what you want to do, right? And it's probably a lot of folks are probably hearing that. It's like, that's not what we want to hear, T-Shroom. We want you to tell us if we should buy or if we should hold or if we should sell, right? And here is the real chart that you guys need to be tracking. The real chart is this one here. I pull it up so often. Usually after Tim has done his TA on our 3 p.m. live show, 3 p.m. Eastern Standard Time, Tim and I go live again, and he does much more in-depth TA. But take a look here. This is both the halving cycle and the stock to flow model here. And as you can see, we are still weeks away, months away from the halving, right? And as you can see here, when we are in the blue, but getting into the dark blue, you don't really go too much lower from there, which is good, until you get to the dark purple. And in both cases of the dark purple, there was actually a move lower. Now, back in 2018, it actually happened, or 2016, excuse me, it actually happened after the halving. So you had the halving, then you had a move to the downside. Here, I can zoom in on this for you. So you had a move to the downside when we were in purple from about, call it 1,100 down to 800, or more like 750, right? That's pretty bearish. That's something that you would want to know, right? If you're about to take some kind of leverage trade here for the long term. Or even mid-term, right? So we're not even in the purple yet. We're not even in the purple yet. Now, coming back into 2020, in the run-up here to this halving, right, you also saw something similar, right? It wasn't what I'm trying to hit home here is until we're in the red, right? Until we're in the red for the stock to flow, I'm not like just a perma bull, right? I'm not a perma bull yet, right? So we're kind of transitioning right now. This is 2020, but we're transitioning now from that dark blue into purple. But as you can see, in purple, there's these big moves to the downside. Okay, this one from 10,000 down to 5,000, right? Cut it in half. Okay, so all I'm trying to say is while there are plenty of very intelligent people calling for the bull cross, which this is, everything about this is a bullish, golden cross. Where did it go? Oh, I went down to the time frame. Well, everyone is calling for this to be, the big bullish movement. It could be, right? It could be. But if we go look at the historic stock to flow model, right, that has been very, very accurate historically, right? There's still some time where, sure, Bitcoin could get up to, call it 50,000 is what the stock to flow model is actually predicting we should have been kind of trending around at here, right? 50,000. So maybe we do get a move, and maybe that move even overcorrects to the upside, right? Doesn't mean that we're not going to still have a move to the downside even lower than we are now. Okay, so that's just a little bit of salt with your sugar there. I'm not trying to say don't do something or to do something, right? I'm not saying to take a big short position. But the main point I'm trying to make is be very careful and understand that there are still bearish forces out there. There are still bearish indicators from other charts. And, at the end of the day, you're going to have to be the one pushing the buy or the sell button, not me, right? And when you enter the trade, I'm definitely not going to be there telling you when you should take profits or cut your losses, right? So that's why you have to be careful, and you can't take financial advice from thumbnails or even from YouTubers like me, folks who are really excited about Bitcoin. Okay, so let's take a look here at some of the headlines. Before I do, let me just make sure you guys understand. Long term, I'm very bullish, very, very bullish. Some of the most bullishness in the space is coming from me, right? But in the short term, I just want everybody to realize the risks and don't get caught up in the FOMO. That's the big thing. Don't get caught up in the FOMO. Let's take a look at the chat here. Nancy Croy saying, good morning. Good morning, Nancy. Hope you're doing really well. Eric Wallen said, shroomy. Gotta love it. Big Army Piper in the chat saying, good morning. Good morning, Army. Let's see. Eric Wallen saying, yay. Crypto.ai said, good morning, everyone. Was watching Crypto Seth live, but this is my favorite stream. Wow, that's awesome. That's awesome. Great to hear that this is your favorite stream. Piper said, I will be going live about 30 minutes late today at 10 a.m. Eastern Standard Time. All right. Well, that's good to know because I may go over a little bit. We shall see. We shall see indeed. There's not a ton of like earth-shattering news. There is a couple of things that I definitely want to bring to your attention. And let's go ahead and get into those now. This is the news. Van Eyck amends spot Bitcoin ETF application, signals unique seeding approach. So seeding, what is seeding? Well, seeding is something that seems to be missing everybody. Nobody seems to know exactly what it is, but there's a process, right? A legal, semi-legal, semi-financial process of getting Bitcoin into the ETFs legally, right? And it obviously is uncharted territory. But we just did it. All these big financial institutions, from the TradFi and from the new kind of crypto. There's crypto financial institutions that have done this as well, but they just did it with the futures ETF. So they seeded those futures ETFs just fine. Those have been up and operable. Nobody got sued for seeding them improperly. Maybe Grayscale, you could make the argument, has been sued for that reason. But for the most part, the seeding process has gone smoothly. Well, we don't know exactly how it's going to go with the spot ETFs. Now, this isn't something you really need to worry about. Anybody who's going to get punished for this is just going to be the banks. And more than likely, they're not going to be punished. They're going to figure this out because their legal teams are all in the same frats as the regulators' legal teams. All right. One notable aspect of Van Eyck's amended filing is the revelation that an unnamed seed capital investor acquired seed creation baskets for the Van Eyck Bitcoin Trust in October. So it gets deeper here, and it doesn't get much more clear, unfortunately. But that's maybe what we can expect through a process like this one. It's kind of confusing, and I'm gonna do my best to try to interpret some of this stuff. These seed creation baskets consist of 50,000 shares of the proposed ETFs, and they were bought using Bitcoin. So somebody, an unnamed seed capital investor, somebody gave Van Eyck Bitcoin in exchange for 50,000 shares of the proposed ETF, which I will add has not been approved yet by the SEC. Now, I'm sure there was a pretty hefty fee paid to some lawyer to come up with a contract so that whoever made that donation, that purchase of those 50,000 shares of Van Eyck ETF in exchange for all that Bitcoin, that they'd be able to get it back, right, per the contract. So it's a it makes sense. It makes sense that this would be happening. You have to get the Bitcoin in the ETF somehow, and it's never been done before, right? You've done it certainly with gold years ago. You've done it with futures ETFs more recently, right? But both of those maneuvers are just different enough than what is going to be required for Bitcoin spot ETF seeding that we're here talking about it, right? Because it is kind of confusing, and we're not really sure how it's going to go. Well, I'm not going to spend too much more time on this because it doesn't really affect your portfolio. More than likely, if you're listening to the sound of my voice, you already have enough exposure to spot Bitcoin on your own, self-custody, right? So you're not too worried about how successful these banks are going to be with their big spot ETF releases. To the extent that we care about this is whether or not pension funds, family offices, and then corporations on down the line, whether or not they'll go ahead and swap some of their balance sheet cash for this new spot ETF, right? Because it's like slightly more compliant, slightly more kosher with the SEC, one could say, than the futures ETFs, right? That's what we really care about. And there's no new data on that today. Well, let's check in with a tweet from Caleb Franzen. Caleb and I had a great conversation this weekend. Love Caleb, huge friend of the show. We had a great conversation this weekend. That will be getting published more than likely tomorrow because we talked about some stuff that ended up happening last week. And usually these interviews, we want to post them on Sundays, or the following Sundays, like we did with Crypto Seth's interview, which was a raving success. You guys loved it, and we loved making it. So you can expect more of these interviews. Army Piper, we're probably going to have you on. We'll do an interview and talk a little bit about what you're seeing here for the future of cryptocurrency and different things like that. But all's that to say is that we're going to be posting that interview with Caleb a lot sooner because we dropped too much important, pertinent information, relevant to the now, relevant to the present, and we want to get that out to you guys so that you can absorb it. Not that the stuff that we talked about with Crypto Seth isn't pertinent too, but it's not immediate. It wasn't an immediate need. So let's go ahead and look at what Caleb has been tweeting. He said economists have predicted 9 out of the last 3 recessions. So this is a kind of a hard pivot to the macro here, but there's some truth here, right? Which is that we don't know if or when this recession is going to come, right? We're getting so much contradictory data. Friday, I think it was either Thursday or Friday, we got a GDP print 4.9 GDP annualized, which is like, what the heck? That is like that is very good print, right? That is very good print. And that's also showing discontinuity between Wall Street and Main Street, right? So at the same time that we're getting a GDP print of 4.9, which is showing very robust, right? We're getting the NASDAQ selling off and the S&P getting into levels that it hasn't seen since May of 2023, right? Late May. So this is an interesting discontinuity, right? A depegging of the GDP of Main Street to Wall Street. Wall Street is getting their head cut off right now, right? Any firms that didn't kind of read the tea leaves and kept their money here in the SPY or in the NASDAQ, right? They're suffering right now. Now, a lot of them, and I'm talking about their trading floors, right? In terms of long-term investments, these guys are not even dripping a single ounce of sweat. Maybe once the NASDAQ gets down here below 4,000, if that happens, then maybe they're starting to shake a little bit in their boots. This is the S&P, I'm sorry. If the S&P gets down here below 4,000, if the S&P gets down below 4,000, they may be getting a little more worried. If the NASDAQ goes ahead and pushes through this very robust support here and gets down below, call it 12,300, right? That could also be kind of troubling. My hunch is with the positive earnings that we just had from Amazon and McDonald's, I think that we're gonna probably have a few more days of selling, but that's gonna bring a little bit more optimism into the market. And after all, what do you do in the market? What is the mantra? You buy low, sell high. Well, what is Wall Street likely to do here? They're likely to buy lower, right? Especially as Main Street is signaling, hey, we're getting these positive GDP prints. Let's go ahead and keep buying. Well, there's another bullish statistic out there, which is for the first time since June 2022, large speculators' net positioning in the S&P 500 futures has edged up into positive territory. Okay, so the net positioning is actually going positive, meaning that folks are buying the S&P, right? That's generally positive, right? This is from Charles Schwab, investment strategist. So, and she's really good actually. I really like following her on the old X. Liz Ann Saunders, pretty good follow there, and she's kind of pointing out here that Wall Street is actually looking bullish, and it's the first time they have since June 2022. And by bullish, I mean specifically large speculators' net positioning in the S&P futures, right? So that's a specific data point that agrees with the thesis that I just posited, which is that here for the S&P, the speculators are no longer up here, which would make sense, right? And they were right. Up here, you want to speculate that the S&P is going to come down because it's putting in, year-to-date highs. Year-to-date highs is when you want to be short, right? Now that the opposite is happening, right? It's given a lot of those gains back since May, since the summer, right? What do? You go long. And that's exactly the data that Liz Saunders is bringing us right here, is that they are going long all through kind of the after May, so the summer and then the late summer and now the early fall, right? Speculators have been pretty short the market, the equities market, and now they're reversing on that. Okay, well, we're going to get back into crypto, but we're not going to go too far away from TradFi because the CME, the Chicago Mercantile Exchange, is on the cusp of replacing Binance as the top Bitcoin futures exchange. With a notional open interest of 3.54 billion, CME is now the second largest Bitcoin futures exchange. We're going to get to this story in just a second, but first I've got to ask you to like and to subscribe. And then I've also got to ask you, hey, what is your plan this year for paying your taxes? Right? You've been buying crypto, you've been investing in crypto, and maybe you've sold for a profit. Well, guess what? Uncle Sam, while Congress doesn't know what to do about crypto, the IRS absolutely does, right? And they're gonna want you to go ahead and cough up some of those gains to good old Uncle Sam, right? And the way that you can remain compliant, remain in the good graces of the IRS is to team up here with decrypted.tax. That's what Tim and I do. We team up with decrypted.tax. Ernest over there, he'll give you 30 free minutes just to get to know you and see if your tax situation is a good fit for him. You might be thinking, but T. Shroom, my tax situation is so complicated. I pay my CPA a lot of money to help me figure this out. Well, with our link in the description, you actually get 25% off. And so you have nothing to lose here. You may actually be net saving money here. I don't know what you're currently paying your CPA. Heck, could I know that, right? But you do. And if you go book a free consultation with Ernest, tell him Investing Bros sent you, then you're going to get that 25% off. And who knows? That may be cheaper than what you're paying now. You have everything to gain and nothing to lose. And look, if you have never paid taxes on your crypto, that's muy mal for my Spanish speakers. It's very bad for my English speakers, right? So in both cases, whether you speak Spanish or English, you're going to be in a heap of trouble if you're not paying taxes on that crypto. You're going to want to figure that out. And the way to do it is by going over to decrypted.tax, booking that free consultation, and telling them that the Investing Bros sent you. Ernest is a great guy. We love chatting with him. We got a meeting with him this week, and we'll be bringing you guys some updates if anything comes out of that meeting that you should know. But let's get back into the data here. Let's read on this CME futures article here. The regulated is a key term here. Regulated Chicago Mercantile Exchange is climbing ranks on the list of largest Bitcoin futures and perpetual futures exchanges by open interest in a move reminiscent of the early stages of the 2020 to 2021 bull run. Okay, with a notional open interest of 3.54 billion, CME is now the second largest Bitcoin futures exchange, up from the fourth position seen weeks ago. Wow, so it It has flipped the third and the second, and now it is second. According to CoinGlass, notional open interest refers to the U.S. dollar value locked in the number of active or open contracts, right? And that's up or down, long or short. Keeping the top spot is the offshore unregulated exchange Binance with an open interest of 3.83 billion. That's 8% higher than the CME. So what does this tell us? Why is this relevant to you as you trade today, as you decide this week whether you're going to DCA? How is this relevant? Well, it's mostly relevant for traders, but what it means is that the futures markets, the paper markets as it were, folks that are really they're quite sophisticated if they're doing this regularly, right? All you're doing when you're trading futures is you're buying a contract, you're paying for a contract that gives you the rights to either buy or sell in the future at a defined price, right? And whether or not that market is regulated or unregulated is really what this article to me is highlighting. And you have to decide for yourself, would you rather crypto futures, right? The for better or worse, a big influence on the price of crypto, would you rather that be regulated or unregulated? And the CME is an American regulated market regulated by the CFTC, right? So it's not the SEC, which is more favorable, but it is an American regulator that at any time, the American people could vote in some administration that is very, very bearish on crypto, very hawkish, wanting to bring crypto down to the bare bones, and that could potentially have an impact on price. So to be honest with you guys, there isn't really anything leaping out to me about this statistic that is going to make me either buy or sell this week. But what it is saying is that we're moving into a phase where the CME is going to be having more control, just objectively. I don't know that it's a lot more control, and I don't know that they're going to exercise that control. But they are going to have more control around the amount of paper, right, and maybe the flow of paper, the volume of paper that's going back and forth on top of mostly Bitcoin, but also Ethereum, right? So it's important to track these things. Again, I wouldn't let this specific data point kind of influence whether you're going to go long or short or whether you're going to DCA this week, but it is good to know that Binance is really getting a run for its money here. And it's just, is it Binance FUD? I don't know that it's quite Binance FUD, right? Because it hasn't happened yet. There's that flippening hasn't happened of the CME. But it is kind of this fight that kind of plays into a larger conversation in crypto, right? That there's this TradFi entity, the CME, and there's this Bitcoin, more crypto community entity, which is Binance. And they're kind of duking it out right now on a very, very important battleground, which is the futures regulator in the futures market. So really interesting stuff there. And we're going to get out of crypto here. We're actually going to go over to China, where Evergrande shares fall an additional 20% to all-time low as court adjourns winding up hearing. Now, I'm not going to pretend like I've been following this story super closely, but this is probably the fourth or fifth major headline from China. You also had the Garden headlines, that is even a larger financial institution than Evergrande. But this is probably the fourth or fifth major headline from China signaling kind of this slow crash of their real estate market. Evergrande's shares plunged more than 20% from last Friday's close of 23.6 Hong Kong cents to the all-time low of 18.8 Hong Kong early Monday before recovering slightly. Okay, Reuters reported that Justice Linda Chan from Hong Kong's High Court said the December 4th hearing would be the last before a decision is made on the winding up order. Piper, I'm interested to hear what you have to say. Perhaps you're going to be expanding on this more in your show that's going to be going live at 10 a.m. Eastern Standard Time. But I'm interested to see what your thoughts are, because Piper, in addition to a couple of my friends in the crypto space, have actually been hesitant to take long positions in crypto, whether it be Bitcoin, but also further in the risk curve, right, even in stocks. So, he'll expand on this much more, and he's taken some more long positions since then. But it's motivated much of the market to stay on the sidelines to kind of see how all of this kind of worry, this fear, this anxiety over in China, see how that falls, see how the dust settles, and see what's going on. What are we working with post, essentially the bankruptcy and the redistribution of assets for these major giant Chinese financial institutions, specifically from the real estate side. So as of now, it's looking like things are not going so smooth, right? Because Evergrande is moving to the downside another 20% today. Let me see if I can find a chart on this. Yeah, so this is Evergrande. And as you can see, man, it has just been getting slaughtered. And today, whether or not we'll really be able to see, it is just going further down. So I don't know how helpful taking a look at a chart is actually going to be. So we will leave that be. But ultimately, not good for the Chinese markets. And the real question I'm asking is, how much more pain does there need to be? Or have we reached max pain with this narrative? Because folks like Piper are smart, right? Folks like Piper are keeping their money on the sidelines until the dust settles on this story. Well, how much longer is that going to be? How much longer until China figures this out and says, hey, this is how much we've lost. This is how much it's set back our economy. And these are going to be the consequences. If the consequences are Chinese real estate takes a big haircut, then who cares? All right, it's risk back on for those who are following this narrative and investing accordingly, right? But if they're like, oh, we're not going to be able to pay, these corporations are not going to be able to pay off their bondholders, right, or something, or they're going to pay, the People's Republic before they're going to pay any kind of foreign entities back, then that could be very, very bad, right? That's kind of the worst case scenario, is if the People's Republic of China decides that they're going to go ahead and make a pathway for, Evergrande and Garden to go ahead and pay the Chinese people in one way or another back, or the Chinese government back, before they pay foreign investors back. That could be devastating for global markets, because that would be a ton of money that would basically be taken out of the global economy, right? Money that was wound up in those Chinese real estate institutions. That money would essentially be erased, taken out, and then it would be risk off. That would be a risk off event for the markets. Now, luckily, this has happened gradually. This has happened over time, right? So financial institutions have been able to reposition. So, because of that and the fact that it didn't all happen at once, we are in a more favorable present than we could have been, which is good. But it's not good for Evergrande, which is essentially a failed bank at this point. Failed banks seems to be the narrative here for 2023, whether you're on American or Chinese shores, or Swiss shores, as it turns out. Deutsche Bank actually has come out somewhat okay. So the Europeans are doing somewhat okay, although I've heard really bad things about Germany proper, how they have not done very well at all, and how Germany is essentially bankrupt. But that'll be for another day that we talk about that. Let's go ahead and hop into our last headline here. Biden unveils U.S. government's first ever AI executive order. So Biden here, he's been doing a lot of thinking, right? He's been revving the engines on the old noggin, and he's coming up with some conclusions here. What is he thinking? It's the U.S. government's first action of its kind, requiring new safety assessments, equity and civil rights guidance, and research on AI's impact on the labor market. Ding, ding, ding. This is what I said when I actually got to interview the founder of Midjourney, which is actually how I met one of my best friends. But Midjourney, on their Discord, they actually have an opportunity for you to talk to their founder. Let me get his name here. And I did. His name is David Holtz. That's right. So I talked to David, and this was one of the main concerns that I had with David was, and nobody was talking about it, right? It was a lot of artists that were coming on. And if you don't know what Midjourney is one of the AIs that you can go in and you can say, kitty cat with a stick of celery in its mouth, right? And it'll just make you a picture of that, which is pretty cool. And it's also put a lot of people out of work. And so I took to, but this can happen on a much greater scale with a product like ChatGPT, because there's just because there's both. But I took this issue to David Holtz on Midjourney, and that opportunity that I had to speak with him live, which actually is technically still posted on our Patreon if you wanted to go check that out. If you're a member of our Patreon, but we don't really talk about that a whole lot anymore because we use the YouTube membership program now, which go ahead and leave a like. If you are new, if you're coming in just now and you're watching the tail end of this here stream, go ahead and leave me a like and also subscribe if you're getting any kind of value out of this. But I'm going to tie this all back, right? So I was on that Discord and I was speaking to David Holtz and I was bringing up these issues about what the heck is going to happen with unemployment rates when all these employers across the line, mostly in the media, mostly and also but in pretty much every industry, when they just start replacing people with AI, because certainly it's going to happen. I mean, they've been raving about the promise of this technology, and when I brought that up, David Holtz, he kind of reacted in an interesting way. It seemed he had absolutely had these conversations before around this topic, but because there were thousands of people listening in on that conversation, he was hesitant to take anything but a everything's okay position on it, right? So I didn't push him too hard because I realized the position that he was in. But from that moment, I realized this is pretty serious. Like, this is going to have some pretty big impacts on our economy. And if one of the Fed's dual mandates, one of the two of the dual, is to keep labor markets, quelled, to keep it under a certain rate. I believe it's 3.5% unemployment is their target rate, right? And it's under that, so that's good. But what happens when it gets up to 30%, like it did during the pandemic? But it's more structural. It's not just because you're telling everybody to go home and stay home. What happens when it's actually structural? As a result of AI replacing people and they no longer have a job. And so they're going out, right? They're going out to the job fairs and they're saying, hey, I need a job. They're applying again and again and again, and they're getting fed into that statistic from the Bureau of Labor Statistics, which is unemployment. What happens then? What happens when that ticks up to 10% and stays, right? What does the Fed do and how does that affect markets? Well, here we are. We're getting a headline here from Joe Biden taking an executive order. And for those of you who don't live in the United States, first of all, well, we won't go there. An executive order is basically where the president can obfuscate the system, the congressional system, the legislative system, and just say, hey, I'm going to do this. Right? Let's see. Some notable executive orders have been on immigration. I believe the actual rollout of the COVID vaccines were, I'm probably going to get totally demonetized now for this video, but that was also an executive order. But there's been a lot of executive orders that essentially obfuscates Congress, right? It goes around Congress. But that's a built into the system, right? Mostly to react to things that are suddenly happening or are of great importance that don't really need necessarily Congress's approval. So that's kind of the context here. This is a rushed political movement. This is a rushed executive action. So let's go ahead and read a little bit more of the details here. The order builds on voluntary commitments the White House previously secured from leading AI companies and represents the first major binding government action on the technology. So it is binding. So how is there still a balance of powers? Well, in the United States, let's say this is going to negatively affect Microsoft, right, which is a leading and behemoth in the AI race, right? Well, Microsoft could say, okay, we're going to take this action to court, right? We're going to take this, and more than likely would go to the Supreme Court. Depending on the issue, it may go to the Supreme Court very quickly, like the next month, or it could take a while. But there would be some kind of, that's where the balance of power comes in, right? And the judicial branch would say, hey, executive branch, you got to slow your roll here. And we're going to go ahead and overturn this. And then I believe then it goes to Congress to try to figure out, well, how do we solve the problem, right? But you wouldn't put it past, in the American political climate, you wouldn't put it past the president from doing a similar executive order that would try to do the exact same thing. Actually, an excellent example of this is what Biden has been trying to do with paying off student education debt, paying off their college loans. I think he's done maybe 2 or 3 different executive orders to try to do that, all of which have faced an injunction for the judicial branch. And now Congress doesn't have any kind of appetite to do that. well, most of Congress doesn't have any kind of appetite to pay off a bunch of students' loans because it's probably illegal, right, or unconstitutional. But that's kind of a comparable example, you could say. But let's get into some of the more details here. Piper, now we're finding that it is not difficult for me to go past 9:30. So this is an interesting little experiment here. But the White House breaks the key components of the executive order into 8 parts of which we will hopefully get through some of them. The first part is creating new safety and security standards for AI, including requiring some AI companies to share safety test results with the federal government, directing the Commerce Department to create guidance for AI watermarking, and creating a cybersecurity program that can make AI tools that help identify flaws in critical software. Okay, so this is signaling to me this is actually fairly comprehensive here. Again, I would have much rather liked to have seen this go through Congress, but someone from the AI community has been working very closely with with Mr. Biden here to come up with this. Protecting consumer privacy, including by creating guidelines that agencies can use to evaluate privacy techniques used in AI, advancing equity and civil rights by providing guidance to landlords and federal contractors to help avoid AI algorithms furthering discrimination and creating best practices on the appropriate role of AI in the justice system, including when it's used in sentencing, risk assessment, and crime forecasting. Oof. So I grimace here because while this is something that I've predicted for a while, and you really shouldn't be surprised, it does hit different and kind of hits my spirit a little bit different to actually see it coming out of the White House, right? That this is something that is actually seeing some legislation, or in this case, not legislation, but an executive order. Protecting consumers overall. Well, I mean, there's a lot you could say about this one, right? A lot. I'll save it for Ben Shapiro. Protecting consumers overall by directing the Department of Health and Human Services to create a program to evaluate potentially harmful AI-related healthcare practices and creating resources on how educators can responsibly use AI tools, supporting workers by producing a report on the potential labor market implications of AI and studying the ways the federal government could support workers impacted by a disruption in the labor market. This is the big one here because this one would ultimately impact some Fed decisions, right, that would impact your portfolio. That's a big one. In my opinion, this is the big one. A lot of these other ones are kind of, the security obviously is a very big one as well. But let's see. Promoting innovation and competition by expanding grants for AI research in areas like climate change and modernizing the criteria for highly skilled immigrant workers with key expertise to stay in the USA. Okay, interesting. So what are the incentives going to be for folks who have migrated here that now can't find jobs, right? Oh, well, we'll subsidize the climate and modernization industries so that those immigrants will stay here. Interesting move. Again, none of this is surprising to me. All of it kind of makes sense, especially from this administration. That's kind of what I'm looking for here. Is there anything that's kind of off key, right, that doesn't really resonate with the rest of the Biden administration? And so far, that's not been the case. Working with international partners to implement AI standards around the world, developing guidance for federal agencies, use and procurement of AI, and speed up the government's hiring of workers skilled in the field. Okay, so there you go. That's very, very interesting, and I'm sure that this is far from the last that we will hear about this, but this is definitely big news. The elephant in the room is how much of Sam Altman's fingerprint is on this executive order. How much was he in the room with Biden and Biden's aides to be able to come up with some of these bullet points of what needs to be addressed? Another question I'd have is how much more in depth does the actual order go than how much we're seeing here from CNBC's summary, and how many of those details would surprise me. Because none of this really surprises me. Only a few of these things worry me. To be honest, it's nice to see at least some sign of comprehension of the risks here, especially to the labor market. Say what you will about Joe Biden, right? I'm not getting up here and singing his praises by any means, but the government needs to get ahead of this. Absolutely. It's a huge risk. If we started to see 5, 10, 30% unemployment rates in the United States, the Fed would have to act, right? And it would have to act in a way that it hasn't had to act yet. The Fed has had the luxury of the labor market being, at least according to the Labor Bureau of Statistics, resilient and robust, right? Resilient, resilient in the face of all that's going on in our economy. The Fed has not had to have that be an issue. It hasn't had to shift its focus and align its policies with a uncooperative labor market, right? The labor market has been doing what it needs to do to allow the Fed to really tackle at the other side of the mandate, inflation, right? So that has been a luxury for the Fed. As much as they've seen under pressure and under the thumb of media, financial media, they have had the luxury of the labor market playing ball, so to speak. Well, that could be coming to an end if AI replaces everybody, right? And so here's kind of my takeaway here. And it's not really a very crypto takeaway at all. I apologize. We're kind of getting away from that here with this episode. However, what I would say is that you want to have a long-term outlook, right? You want to have a long-term outlook and understand the dynamics of supply and demand. Look, if AI starts to replace like loads and loads of workers, and I'm talking truckers, right? We're talking copywriters. We're talking most marketers, right? Think about all the ads you see on TV as you're watching TV and watching YouTube. All of those ads are still being made by human teams with little injections from AI. But what happens when I'm, working at Pepsi and I'm working at Pepsi's marketing company? I'm the director of marketing at Pepsi, and I'm like, there's this AI company that I don't really I can fire all my staff, right? And end all my contracts with, the marketing companies that I work with to be able to create all the ads, the millions and millions of dollars that I spend annually on ads for Pepsi, right? I don't need any of that anymore because I have one AI team, one group of like 5 people that just are really good at running AI. And all I have to do is say, hey, we want to go conquer this new market, and they can make an entire marketing campaign in an hour and a half. All the video assets, it can tell me where I need to spend that money specifically, all the key terms, right? And we're off to the races. That's just one vertical, right? That's just one company in one vertical of beverages, right? Within the food and dining services and hospitality, right? You can imagine how this could be very, very disruptive if all people jobs were replaced by AI. But what I've said and what I brought up to David Holtz is that while this is a possibility, things are going to get very ugly in the short term, but in the long term, we could be stepping into a truly utopic future. Now, there's that word, right? That word that has sent chills into very intelligent people's spines over the years. Because when you bring up the concept of a utopia, there's always kind of that Orwellian urge to say, whoa, 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 hold on. But I think it's a little bit different here. And this is a T-Shroom original thought here. I'm not speaking on behalf of Tim or Piper or anything when I'm saying these things. But I think that there's a future in which AI gets so advanced and so appropriately adopted by industry and politics, right, that we're actually seeing prices, the costs of services and goods come down so significantly that we do get to a greener pasture. So when I say utopia, I don't think that we solve all the world's problems, but I think we solve for price with AI in a very big way, right? That's a possibility that the future could hold. And it is key that in order to get there, we have sound regulation and that we have the world's leaders understand the risks of AI and understand its potential appropriately. So the elephant in the room is how much of a fingerprint does Sam Altman, founder of ChatGPT, right, a company that is now, for all intents and purposes, owned by Microsoft, how much of a fingerprint is on this legislation from him? How much of an impact did industry in general have on this executive order? Or was this just something that Biden and his internal team came up with, which is also possible. There's a lot of smart people out there working for Biden that could have come up with this. But this line, these bullet points definitely show to me that there is something going on here. And, kind of the question is, why now? Why now? But in any case, there is a very bright future that could be realized by humanity if we can get through what I call kind of this terrible phase, right? This phase where unemployment is going to shoot up potentially, right? It's going to, but in my opinion, it's going to happen, right? Unless there's some kind of legislation keeping companies from seeking profits and using AI to do so, and foregoing human labor and human capital to do so, then I don't see a way around sky high unemployment rates. So what are we going to do about it? It's not going to be me. It's going to be, Biden. And Biden looks like, here with this CNBC article, it looks like he's signaling that he has a plan. Would I have liked to have someone else in office to be able to be addressing this? Of course. But it's good to see that there is a plan in place, the beginnings of a plan in place here to try to figure out what the heck to do about a horizon that has giant skyrocketing unemployment due to AI replacing folks' jobs. Now, if you have never used an AI bot, you might be thinking, what the heck, T-Shroom? What are you talking about? How could an AI replace jobs? How can an AI do what people are doing? Well, first of all, I would say you are well behind the curve if you're asking that question. Now, I would imagine that not many are asking that question, tuning into a crypto investment channel, because by nature you're kind of an early adopter, right? You're on the bleeding edge, trying to figure out where you should deploy your capital to try to invest in a lot of these types of projects. Well, the reality is that there are a lot of folks who have not even logged into ChatGPT for the first time ever, Midjourney, anything, right? Maybe they have a nephew who showed them like a cool picture they made on Midjourney, but that's about it. That is true though, right? And those people have no idea what is coming. And there's no way that they've been positioning their portfolio or their positioning to the labor markets accordingly and appropriately. There's no way. There's just no way. But we got to get through this filter. We got to get through this huge challenge, this obstacle that society is facing, and it's gonna also it's gonna hit different for India than it's gonna hit for China, than it's gonna hit for Europe, than it's gonna hit for South America and North America, right? These things are not going to be ubiquitous. It's not going to be just one phenomenon that hits the globe the same way. Why? Well, because the internet isn't the same in India that it is here in the United States. We enjoy here in the United States, North America, and Europe, internet pretty much everywhere you go, for the most part, especially in the East and West Coasts, where there's some spottiness. I'm sure if you live in the Midwest, you'd say a lot more than some spottiness. But for the most part, we enjoy internet almost everywhere we go, right? In India, that's not the case. In South America, that's not the case. Now, with Elon's Starlink, that can be the case, but for now, it's not. All right, guys, we're almost closing in on an hour, so I want to go ahead and cut it off here because we want to try to keep these episodes to 30 minutes. And Piper, I'm finding that I very much appreciate your show going on at 9:30 because it keeps me grounded. It keeps me from sitting here and expanding on these inner machinations of my mind that I've been thinking about for quite a while that make their way into the headlines. But for better or worse, guys, we are going to be looking at this golden cross and seeing how it plays out. It looks like right now it's playing out pretty bullish, as Bitcoin has a chance here to close on the daily higher than it has in at least a year. Right? I'm not going to scroll back just for the sake of time. You should look, and why do I say that? Because T-Shroom, there's all these wicks higher. How could you say that? Well, it hasn't closed daily higher than where it is right now. So if we can get a close here today, really higher than 34,526, according to my charts here. I'm sure it's not exactly that. That could be very, very bullish, right? That could bring in a lot of folks to say, hey, equities looking like they have more downside. Chinese equities, I don't want to touch them with a 10-foot pole. Crypto's looking pretty good. I'm going to go ahead and buy a little Bitcoin. That is what a lot of folks will be saying here. If this daily candle can close above 34,500. Guys, I'm going to go ahead and leave it there. We've had a lot of fun. We've talked about AI, and man, there's a lot going on, guys. But hold strong to your faith. Hold strong to the notion that Bitcoin is going to bring a lot of financial freedom and try to get some people on board, right? Try to get some people to invest at least 100, maybe $200 into Bitcoin specifically as we move into this new age where who knows how AI is going to affect these markets. And fast forward 20 years, you have to imagine that if you didn't buy Bitcoin, right, then you didn't have peace of mind during what could be one of the most tumultuous times of human history as we try to figure out how to integrate this new technology into our society, into our economies that could potentially put us all out of a job, right? And in the short term, it could be chaotic. There could be civil unrest. It could get bad. But in the long term, I believe, and I hope that you do too, that we could be on the precipice of something approaching a utopia. If it be God's will, then may it be done. If not, then hopefully you have a little Bitcoin to help you get through as the uncertainty bomb explodes on this earth, brought to you by AI. All right, guys, have a great rest of your day. Make sure you turn into Piper here at 10 a.m. Eastern Standard Time. He'll be going live at Piper's Academy. Hopefully he's dropping a link in there. And then 3 p.m. Eastern Standard Time, Tim and I will be going live to discuss a lot of these things in much more in depth. And absolutely, we'll be getting into that Golden Cross and how it's played out. Thank you for tuning in. Have a great day.
Trying to make paper, turn that better to cake. Money like Lego, connect the dots, stack bank. We are investing bros. We are investing bros. Army pipe, lethal on trade. Entries and exits, worthy of praise. Tim, the professor, the TA. Shout it out loud on the PA. T-Shrooms news, got the word. Doing better than what he deserves. Beamer, leave no evidence. Soon fly coop with his dividend. Trying to make paper, turn that better to cake. Money like Lego, connect the dots, stack bank. We are investing bros. We are investing bros.